The market seems like it stepped on its brakes today. Palantir's price is in a correction. The bears stepped in. However, the community seemed like it's not bothered. A golden opportunity might be coming soon. Insane $2,500 is no joke. Blackrock just did something massive for Palantir. And they just keep on coming. What is happening? And what on earth am I even talking about? Well, let me explain. Disclaimer. Palantir hit a bit of turbulence today. After yesterday's massive rally, where it blasted to a brand new all-time high, the stock took a slight dip, dropping to as low as $112 per share. Not exactly a crash, but enough to shake things up a little. And of course, that was all the invitation the bears needed. It's like they'd been holding their breath, just waiting for a red candle to pop up so they could jump back in. Suddenly, they're everywhere again, spreading the usual doom and gloom. The Palantir is overvalued talk is making the rounds, with the same tired arguments we've all heard before. One analyst even jumped in on Twitter, throwing in his 2 cents about Palantir's valuation. He kept it blunt. Palantir is expensive. The sky is blue. We all know that. His point? Yeah, the stock is pricey, but that's not exactly breaking news. According to him, for Palantir to justify its sky-high 7x PEG ratio, it needs to keep blowing past expectations, making Wall Street's estimates look laughably low. To be fair, that's exactly what they did last quarter with those insane results. But at this price, they have to keep delivering every single earnings report, without fail. The key, he says, is shrinking the gap between what people think the company is worth and what its actual numbers will prove over time. Right now, the market is pricing in a future that Palantir still has to live up to. If they keep crushing expectations, that future becomes reality. If not, well, that's where things get shaky. Basically, the pressure is on. But you might be wondering, why? Why is this happening? Well, let's take a step back and look at the bigger picture. According to analysts, when a stock pumps like crazy, why? It just goes up forever without taking a breather. After a massive rally, a lot of traders cash out, locking in profits, and that naturally puts some downward pressure on the stock. It's not necessarily a bad thing. It's just how the market works. Think of it like running a marathon. If you sprint full speed for miles, at some point, you have to slow down, catch your breath, and reset before you can keep going. That's exactly what's happening here. A dip like this doesn't automatically mean the stock is doomed. It doesn't mean a crash is coming. Stocks go up, they pull back, and if the fundamentals stay strong, they find their footing again. But of course, the moment red candles show up, the bears start celebrating like they've been proven right all along. Meanwhile, those who actually believe in the company, they're just watching, waiting, and keeping their eyes on the long-term game. And here's the kicker. Another reason for the dip might be that some big institutional investors are cashing out. In fact, it was just reported that Cathie Wood's ARK Invest sold off a massive chunk of Palantir shares. ARK Invest made a series of big trades, and one of them was unloading over 250,000 shares of Palantir from its ARK Innovation ETF. That's a sale worth well over $28 million based on the latest closing price. Now, Cathie Wood has a history of trading Palantir pretty aggressively, buying big, selling big, but anytime she offloads shares, it tends to stir up conversations. Some see it as just another routine portfolio adjustment, while others start questioning whether she's losing confidence in the stock. But here's the thing. Just because ARK is selling doesn't mean Palantir is suddenly in trouble. Big funds like this rebalance their positions all the time for a bunch of different reasons. Maybe they're taking profits. Maybe they're shifting into other plays. What matters most is whether Palantir keeps proving itself with solid growth and execution. Still, moves like this can shake up sentiment in the short term. And when combined with a natural pullback after a big rally, it's no surprise the stock dipped today. But hold up. There's something you need to know. Despite all the bearish noise lately, the Palantir community, yeah, they're completely unfazed. If anything, they're more confident than ever. For them, Palantir has already shattered expectations, already proven itself as a company that's more than worthy of its valuation. And instead of panicking over the dip, a lot of them are actually hoping the price drops even further. Because to them, that just means one thing, a better buying opportunity. One analyst even shared his thoughts recently, saying, "Give me a dip to around $100 to $105, and I'll not only cover my short position but also go long for the bounce back." In other words, he's just waiting for the price to hit his target before flipping bullish again. This kind of mindset isn't uncommon in strong communities like Palantir's. When retail investors truly believe in a company's long-term potential, short-term dips don't scare them. They excite them. They see it as a discount, a chance to load up before the next move higher. And that's why, even with all this back-and-forth price action, the conviction behind Palantir still seems rock solid. And speaking of hype, one analyst even shared a crazy prediction that Palantir might reach a whopping $2,500 per share in 2030. However, this might sound unlikely, but we cannot deny the fact that it explains that whole atmosphere in the community today. And here's the bomber. This dip might actually be a golden opportunity. And it looks like it's not just retail traders seeing it that way. While some investors are panicking, others, especially the big players, are taking full advantage. In fact, just today, it was reported that Blackrock made a serious move on Palantir. They didn't just buy a few shares here and there. They went all in, adding a massive 14 million shares to their portfolio. This is a massive signal, especially with someone like BlackRock stepping in. We're not talking about some small hedge fund testing the waters. This is BlackRock, one of the biggest, most powerful asset managers on the planet. When they make a move, it's calculated, strategic, and backed by some of the sharpest minds and deepest research in the industry. And here's what makes it even more interesting. BlackRock isn't the kind of firm that jumps in and out of stocks just for a quick flip. When they add millions of shares like this, they're usually thinking long-term. They don't make emotional decisions based on daily price swings or social media hype. They move with conviction, and they move when they see an opportunity. So that raises the big question. What do they see that others don't? Could something be happening behind the scenes? Are the insiders giving signals that aren't obvious to the rest of the market yet? Maybe another huge government contract is on the horizon? Maybe Palantir's future growth is looking even stronger than analysts are predicting. We don't know for sure, but moves like this don't happen by accident. When a firm like BlackRock steps in while others are fearful, it makes you wonder, are they just early to the party while everyone else is still hesitating? As always, only time will tell. But if history has taught us anything, it's that following the smart money usually isn't the worst idea. So with everything considered, it's pretty clear. Palantir isn't going anywhere. In fact, it's just getting started. With the company leading the AI charge, it's positioning itself as a total game changer. And let's not forget, Elon Musk has been talking about this space a lot lately, and his recent involvement only adds more fuel to the fire. Just recently, he tweeted something that caught a lot of attention. Frankly, the biggest factor in making the government more efficient is modernizing the technology. That's a massive statement. And if there's one company that's already doing exactly that, it's Palantir. For years, Palantir has been deeply embedded in government contracts, helping agencies process insane amounts of data, improve decision-making, and basically upgrade how things work behind the scenes. And now, with AI playing a bigger role than ever, Palantir's position in this space is only getting stronger. So while some investors are getting shaken up by short-term price swings, the bigger picture is still crystal clear. Palantir isn't just another AI stock. It's one of the few actually driving real-world change, especially in areas where innovation is long overdue. And if people like Musk are out here reinforcing just how important this shift is, it only makes the future for Palantir even more interesting. However, no matter how exciting things get, we always have to be smart and cautious with our moves. The stock market is unpredictable, and as one Palantir analyst put it perfectly, staying logical is key. He addressed Palantir investors directly, reminding them that some of them have made insane returns, 13 times their money in just a few years, while others have doubled, tripled, or even quintupled their investments. He said, stocks don't just go up forever. It's not a fun thought, but a stock can't go parabolic infinitely. No matter how strong the company is, corrections will happen. And in Palantir's case, that could mean a serious drop at some point, maybe even 50% or more. That doesn't mean the company is doomed, and it definitely doesn't mean the bears were right. It just means that taking some profits after a massive run isn't a bad idea. No one ever went broke securing gains when things are high. And he makes another great point. Palantir investors aren't part of a cult. They're logical, strategic investors. If you truly believe Palantir is a trillion-dollar company in the long run, then corrections shouldn't scare you. Volatility is just part of the game. But if you can't stomach the roller coaster ride, there's nothing wrong with trimming a little, hedging, or making smart moves to protect gains. At the end of the day, the market will do what it does. And while Palantir's future looks incredibly strong, No stock moves in a straight line. The key is having a strategy, staying logical, and not getting caught up in either hype or fear. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.
Take Blackrock, for example. They're the largest asset manager in the world, handling trillions of dollars. One of the reasons they've reached the top is because they're using AI and other advanced technologies for a long time. By leveraging the power of AI, they've been able to make better investment decisions, manage risks more effectively, and stay ahead of the curve in the fast-paced world of finance. Another exciting feature that AlgoWave offers is their AI-based monthly projections. These projections give traders a significant advantage by offering insights into market trends and potential opportunities. By harnessing the power of artificial intelligence, they can make a better investment decision. This is a great way to leverage the power of AI. These projections provide a forward-looking perspective, allowing traders to make informed decisions and stay ahead of the game. Whether you're a seasoned trader or just starting out in the world of cryptocurrency, these monthly projections give you the knowledge you need to make the most of your investments and increase your returns. And of course, what would a project be without staking? AlgoWave offers the opportunity to unlock the full potential of your assets through token staking. By staking your tokens with AlgoWave, you can earn passive income, while also helping to secure and stabilize the network. When you stake Algo tokens, you not only receive rewards, but also contribute to the governance and development of the AlgoWave ecosystem. It's a chance to be part of a stronger, more resilient community, one stake at a time. The Algo wallet offers a powerful ecosystem driven by AI, which means it's equipped with smart features that can help you make better decisions and manage your investments more effectively. With real revenue rewards, you can earn money simply by using them. Wallet and participating in the AlgoWave ecosystem, providing an extra incentive for engagement. The detailed market dashboard gives you a comprehensive view of the cryptocurrency market, helping you stay informed and make informed decisions. Seamless integration with AlgoDefi ensures that you can easily access decentralized finance services directly from your wallet, streamlining your experience and making it more convenient to engage with DeFi protocols. Finally, the wallet provides non-custodial security, meaning you have full control and ownership of your assets at all times without having to rely on a third party to keep them safe. This ensures peace of mind and protects your assets from potential security breaches. And here's some exciting news. AlgoWave is launching on Uniswap tomorrow, May 13th. So mark your calendars and get ready to participate in this innovative project. To kick things off, they're starting with 10 Ethereum of initial liquidity, which has been funded through a small private sale dedicated to liquidity. Notably, there's no pre-sale involved in this launch. This approach offers several advantages. Firstly, by starting with a small initial liquidity pool, it allows for organic growth and ensures that the market can establish itself naturally without any artificial inflation or manipulation. Secondly, the absence of a pre-sale ensures a fair distribution of tokens, preventing any single entity from having disproportionate control over the project from the outset. Additionally, AlgoWave has a unique token tax strategy. AlgoWave's token launch strategy involves starting with a higher tax rate of 25% for both buying and selling to prevent manipulation during the initial phase. This higher tax discourages rapid trading and speculative behavior, promoting stability and fair value discovery. However, the tax will eventually decrease to 0% after this initial period. This approach is strategic because it addresses short-term concerns about market manipulation, while still allowing for long-term growth and liquidity. Gradually reducing the tax rate to 0, AlgoWave aims to incentivize sustained participation and engagement in the project while maintaining a healthy market environment. And here's something huge. With the AlgoWave wallet, you can explore the world of digital assets effortlessly, thanks to its seamless support for multiple blockchains. This means you'll have unparalleled flexibility and accessibility, allowing you to engage with various decentralized finance platforms and assets. Whether you're interested in Ethereum, Bitcoin's groundbreaking technology, or the scalability of Avalanche, the AlgoWave wallet has got you covered. This versatility is particularly good news for investors in tokens.